Got it, friends? Whenever we hear about the stock market, two words quickly come to mind: trading and investing. On one side, there's the trader, moving fast, chasing quick gains, eyes glued to flashing charts. On the other side, there's the investor, calm and patient, quietly letting time do the heavy lifting. Now, the question that bothers many beginners is, which is better, trading or investing? Let me tell you a story. Once there were two friends, let's call them Rahul and Vivek. Rahul was fascinated by trading. He would often say he could outsmart the market. His days were filled with price charts, technical indicators, and endless decisions of when to buy and when to sell. Vivek, however, believed in investing. He would say that businesses are like trees. You plant them, nurture them, and over time, they grow and bear fruit. At first, Rahul seemed to be winning. He had days when he made quick profits, and it looked exciting. Vivek, meanwhile, seemed almost lazy. He would just buy strong companies and hold them, sometimes not even checking the price for weeks. But as months turned into years, their paths looked very different. Rahul realized that constant trading came with hidden costs, brokerage fees, taxes, sleepless nights, and most of all, the stress of being wrong again and again. His money went up and down like a roller coaster, and he spent hours chasing the next perfect entry. Meanwhile, Vivek's money grew quietly. Dividends kept coming in. The power of compounding worked silently in his favor. And while Rahul was glued to his screen, Vivek was spending weekends with family, confident that time and patience were his biggest allies. When you look closely, the difference becomes crystal clear. Traders chase short-term moves. Investors think in years, even decades. Traders are always in action. Investors act less, but every decision is rooted in research and conviction. Traders try to manage risk trade by trade. Investors reduce risk by owning quality businesses for the long run. It's almost like the difference between sprinting and running a marathon. Sure, sprinting looks exciting, but can you sprint forever? Markets reward patience. If you had invested in India's great companies like Infosys, Reliance, or HDFC Bank years ago and simply held on, your wealth would have multiplied many times. No trader could have captured all of those gains by jumping in and out. In fact, studies show that missing just a few of the best days in the market can cut your long-term returns in half. That's why investing works. It allows you to stay in the game long enough to let compounding do its magic. When you notice this truth for the first time, it feels surprising. You realize that the real wealth in markets is not built by timing every move, but by time in the market. So, let's come back to the original question. Trading or investing? Yes, trading can bring thrill. Yes, some traders succeed. But for the vast majority, trading is like trying to catch lightning in a bottle. Investing, on the other hand, gives you something trading rarely does: peace of mind, growing wealth, and the power of compounding working every single day. So if you must choose, choose investing. Not because it is easy, but because it works. Now, I have a small challenge for you. Think of one Indian company you believe will still be strong 10 years from now. Write it in the comments. Let's see which of us can spot the future winners today. And remember, wealth is not built in the rush of a day, but in the patience of decades.